Welcome back to the show, everybody. Check out these headlines we got for you. We got Brad Garlinghouse in the news. FDIC, ladies and gentlemen. Why are they freaking out about the public finding out about the lack of faith in banking system that they have? We're going to talk about that. Charles Gasparino, John Deaton in the news. SEC's Goldman Gensler's in the news. Now let's talk about Novati, Ripple partner. We're going to talk about that. And by the way, what is the fair market value of XRP? And what is fraud in the inducement? Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Right now, $831 billion market cap for cryptocurrency. Good morning. We're off by 0.1%. Bitcoin, 16,600 plus right now. Ethereum, almost $1,200, $11.99 and change. Tether market cap, 66.2 billion, they say. XRP, 34 cents. If you haven't done it, there is a special running right now, and it will not be long. 24-hour flash special for Link 2. Closing out the year, ladies and gentlemen. They're sprinting to the finish line. The goal to hit the $100 million member investments this year. And let me tell you, to say thank you, you can use your Uphold wallet to make an investment of any size in any Link 2 portfolio company before December 29th is over, 2 p.m. Eastern time. And they will credit your account with a 10% of your order size in Link 2 bucks. Come on in. You'll be able to apply that to your next purchase? Yeah. By the way, look at this right here, shared by XRP Nation 1000. Yeah, it says Palm Tree Crew. Now, I got to be honest. Shout out to Brad Garlinghouse and the gentleman next to him. I think it's Manager Miles as far as the tag goes. Does this look like a guy who's worried about a lawsuit to you? As it should be. Brad Garlinghouse exudes confidence. As it should be. By the way, as a side note, Brad, I'd like to know how to join the Palm Tree Crew. Look, that's fun. But the truth is this case will end at some point. And when it does, and listen, it can be a settlement. In fact, if we have a settlement, I lean stronger into the idea that we're going to see a systemically important designation placed on top of maybe RippleNet, the Ledger, who knows, the use of XRP, whatever. However they like to do it, I certainly see the potential for a stablecoin designation for XRP and XLM, to be honest. But there is a very real problem going on that's outside of crypto and just clarity for crypto, ladies and gentlemen. And we know that the banking world, the finance world is in trouble, and they have been before the pandemic happened. Isn't that right? Yes. We were talking and reporting about a liquidity crisis in the banking system well before the shutdown ever happened across the globe. But I want you to listen to this FDIC meeting, which Wall Street Silver says was from November 22, not that long ago. You'll see Gary Conan here talking with others at this FDIC meeting here and talking about the financial crisis and their lack of faith in the banking system that they have and how to keep the public from freaking out about it like they are.
It should be accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
Well, there you have it. I don't think I need to edify any of that. I think it pretty much says it itself. Boy, I tell you, it sounds like the lid is going to come off of this thing when it does, and they don't want you to know until it's too late. What else am I supposed to surmise from that? Act accordingly, ladies and gentlemen. And here we have Goldman Gensler in the news. Charles Gasparino shares if Goldman Gensler, and I'm adding that, wants more crypto regulation, he needs to be questioned by the Financial Committee about his pretty lame regulation of stock market. Take the meme stock craze. He allowed wild conspiracy theories to draw in unsuspecting investors to the stocks like AMC and BBBY that he has covered extensively on Fox. Now, to that point, John Deaton grabs it and basically says what Charlie is saying is simple. Gary Gensler is one of the worst SEC chairmen to ever hold the position when you consider MF Global when he was the chair of the CFTC and that debacle that went on under his watch. You realize he is totally incompetent as a regulator on top of his questionable ethics. I don't think you could say it any better. It's really true. However, if you stand and look through this position that Gary Gensler holds from a much different lens, let's say his own perspective as a professor at MIT, he looks incompetent if you're going at it from the creed of the SEC agency and the CFTC, which is to protect investors. But if we look at what his actions are, or lack of actions in some cases, maybe it looks perfect and more brilliant and less incompetent if we imagine his positions and his motivations and lack of action and action to be not for the investing public, but for the central monopolists.
Central monopolist with another central monopolist. A lot of commercial banks aren't terribly excited about that. Maybe you're going to have to give some ownership. Maybe you'll have to give 50% of your ownership to the 20 banks that are now, part of this. I mean, there are other ways to build incentive systems. Maybe you put a native token in there, and you give them the native token. So there may be other incentive ways to beat the current monopolist. But I, having been around commercial banks for a long time, they really are looking for ways to replace their aggregators in their back office, whether it's clearing, settlement, exchanges, credit agencies. But they are deeply understanding, because they are pretty ambitious and very good at making money as well. They deeply understand that every idea that's pitched to them is somebody who currently is small but wants to get big and gain market power. So they're also always thinking about how to ensure that there's a check to slow down your startup from gaining market power 5, 10, and 15 years from now. They don't want.
And, and we have to ask ourselves, so with that understanding and that clarity in which he was teaching at MIT as a professor, do we understand that the regulatory capture of the SEC is Goldman Gary doing the bidding for the central monopolist in the SEC versus Ripple case and other situations, turning a blind eye to the second largest Democratic donor which he had meetings with, FTX, SBF? None of his actions line up under anything other than, as John Deaton said, as incompetence when it comes to the investor public, protecting the investors. But if we look at it through the lens of this and the central monopolists, it actually looked like they're the ones to benefit from it all, aren't they? let's shift gears a little bit here. This is a piece from Ripple and Novati Payments, which is a Ripple partner here. Shout out to Bill Morgan. It says the CEO, Peter Cook, refers to a process of consumer to business and then through RippleNet to a receiving party. He refers to a super network effect. We're shifting gears because what we're going to talk about now is really thinking about what is the ultimate use case of XRP. And although you're going to hear Peter Cook talk about the benefits that's happening between Australia and Southeast Asia, let's understand that this technology works for the world, and it works beyond just remittance payments and the like. I mean, it can do so much. We all know the drill. Think about the real full-scale use of the asset XRP. We already know there's many applications of it now. If you were to stop all retail trading on XRP, it would still have a price because it's got a real use case beyond speculation. That is one of the things that I absolutely cling to and understand about this investment for myself, not financial advice. But then you're asked the question in your mind, so what is the real fair market value of an asset that can do all of these things that it says it can do? Let's hear from Novati real quick and Peter Cook.
If you look at some of the disruption in payments and financial services,
I've actually got to mute it. I don't know if the music is copywritten here, but it talks about the fact that they're breaking the shackles of traditional banking and traditional networks, being on a compressed commercial relationship that say the banks have been able to build for 40 or 50 years. Disruption about technology. It's about becoming a part of the ecosystem, being being able to participate. They've been listed on the Australian Stock Exchange for 6 years with Novati, and they've been partnered with Ripple for 2 years out of the 6. The other fintech banks, financial intermediaries, it says primarily providing an infrastructure layer or ecosystem to enable them to further their financial services and payments. They're part of the market infrastructure, and they're using RippleNet to get it done. That's what we're talking about. And they got many hundreds of merchants and businesses involved to use and complete payments. It's pretty damn remarkable what they're doing there. Now, I'm not going to continue to do it, so you get that, right? Now let's go here. This is David Schwartz talking about XRP is an efficient bridge between two assets, including stable coins and CBDCs. It's neutral. It's jurisdictionless. It's censorship resistant. It doesn't have any central counterparty you need to go to trust. So it can be used as sort of a universal bridge. Listen to him right here.
Opportunity. So stable coins and CBDCs can make domestic payments better, and that's extremely important because if domestic payments aren't good, international payments can't possibly be good. Mm-hmm. Every international payment, at least a retail or consumer one or anything that's not directly between the largest banks, there's going to be a domestic payment on each side. If I'm going to pay a vendor in Italy, there's going to be a domestic payment once my funds get to Italy to that vendor. And so making domestic payments better is essential if we're going to make everything else better too. XRP is an efficient bridge between two assets, including stablecoins and CBDCs. It's neutral, it's jurisdictionless, it's censorship resistant, it doesn't have any central counterparty that you need to trust, so it can be used as a sort of universal bridge. And blockchains are what provide that level playing field so that banks and regulators can live in a multi-asset future without having to deal with hundreds of different APIs, hundreds of different controllers or different rule sets.
There you have it right there from the one and only David Schwartz. Now, let's take a look at this very quickly. Remember when I put this diagram together showing about the FedNow domestic payment system? It made me think of it when David Schwartz talked about if we don't have the domestic side payments together, cross-border and international stuff doesn't even matter. That stuff's got to be together first. Now, this is a diagram I put together really inspired by that whole notion of FedNow and BRICS in the different fractionalized payment systems, tips and all the different RTGS, all the different systems that are being put together around the world, right? Getting the domestic liquidity organized and these liquidity pools put together properly So then you can draw on them to use XRP for cross-border settlement of very large value payments. That's exactly what that reminded me of what he talked about there. And it's jurisdictionless. Well, I tell you, that also reminds me of the definition from the Financial Stability Board, which is really connected to the BIS and the G20, right? As a part of their definition of a global stablecoin, it needs to be jurisdictionless, censorship resistant. So what is the fair market value of XRP if we understand these things? And the question I have asked many times to Jimmy Valley, who is a dear friend, I have great respect for him, and I think most people misunderstand what he has set out to do here with the XRP buyback discussion. And in this, I want to say, for one, shout out to Molly Elmore, who does an incredible job interviewing him in this. And two, shout out to Jimmy Valley, who breaks it down why the XRP would not be bought directly off of the exchanges by someone like the Federal Reserve. This is quite interesting. He's going to talk about what fraud in the inducement is and how you can't really have fair market value because of the suppression of all of the FUD that we see from so many different people in different areas and sectors, not only in this space, but beyond. Take a listen.
So one question that I know comes up a lot is, if hypothetically there were to be a situation in the future where a government or a bank were to buy back the asset at a much higher value, why wouldn't they just buy all of it right now when it's very cheap? Like, seems silly to not do that. What is your response to that question when that comes up?
So there's several reasons, but I think the most profound reason is that the only reason they would really want to do that is to, in the process of the transaction, establish a true fair market value. Okay, fair market value requires a few things. It requires, both parties not being in a position where they're compelled to sell. So, for example, if you and I want to buy your XRP, if I put a gun to your head and I say, sell me all your XRP or I'm going to blow your brains out, I'm compelling you to sell. You're basically entering that contract under duress. That's not an enforceable contract. Fair market value was not established, right? Likewise, if I know that I'm going to buy your XRP and that we are going to use it as the transformative asset of a new financial system, and that, within a year, 2 years, 3 years, we're going to dramatically increase the price based on a global coordinated effort that we've been engaged in for multiple years, and I don't inform you of that, then I've done the same thing. It's called fraud in the inducement. I'm in possession of material facts that, had you known that, you would not have sold it to me, okay? So we've just talked earlier about all the different fraud and the coordinated FUD and the fact that this lawsuit has been brought, it's been delisted from this exchanges. You have all these media people going on to CNBC, Jim Cramer, you got Michael Saylor, all these people FUDding XRP all the time. Now it seems like it's moved up to the Charles Hoskinson level and the Vitalik Buterin level, and this guy Craig White weighed in here, past couple of days and gotten an argument with David Schwartz, about stuff. So this is a massively coordinated campaign to basically keep people from adopting the asset. So it is a price suppression activity. What is on the exchange is not real. And that's where this is why I think people have so much cognitive dissonance about a high price, is because in order to basically start agreeing to the high price concept, and it doesn't even matter if it's $35,000, $50,000, $100, right? If you think that the price should be $100, you really start to have to question whether what you're looking at on the screen is real or not, which goes to the whole structure, is the whole system real or not, okay? And the cognitive dissonance of not really wanting to know that it's kind of made up.
There you have it, ladies and gentlemen. I love how he explains that the buyback in his view is that the Fed can't buy back because of fraud and inducement, because they have the understanding of what they intend to do with the asset. Now, that's quite compelling. That's the first time I've heard him share that, and that, to me, is a very, very big point to make. Now, the other part of it is, it comes back to understanding all these partnerships, all these relationships. And do we expect that the rest of the world is going to use XRP as they are already beginning to do now, while the U.S. makes a decision, albeit through court or government or a regulator like the SEC, to not? And if that answer is no, and that the U.S. will use it just as the rest of the world, then what is the fair market value of XRP? Not financial advice from me or anyone else, just my digital perspectives. I'll catch all of you on the next one.